Same steps that I take every single Sunday. And once again, if you guys are not doing your weekly outlooks on Sunday, then you're gambling, right? And at that point, you're going to be reacting to price. You need to, once again, you need to understand what price should be doing coming into a new week. Even if you're wrong, right? Let's say if you're wrong, your bias is wrong. That's fine. At least you're not coming into the week clueless, or you just reacting and waiting on some price to do something. No, you need to come into a week with an established bias, and you need to look for certain signatures to support that bias, and that's what kind of we're going to go over here. So first and foremost, we're going to start with news release. We're going to do a little bit of fundamental analysis. I'm not a big fundamental guy, but with everything going on right now in the world, I think it's time to start looking at more what's going on fundamentally in the world, right? So we got government shutdown. We got the Japan dollar. They have a very, very, very important meeting on Tuesday. And this meeting is really going to send the JPY either up or down. In my opinion, I think it's going to be negative news. So I think that the Japan dollar will dump. So that means that JPY should go up, NZ JPY should go up, Euro JPY should go up. So you guys already kind of know we're going to be focusing on those three pairs right there. So once again, we're going to start with the U.S. dollar. We have no news for the U.S. dollar until Wednesday. We have FOMC minutes meeting at 2 p.m. In my opinion, that's not a real news release. FOMC minute meeting doesn't really do anything for the market. Now, if this was the FOMC, actual release, then yes, that will affect the market. But the minutes mean, from my experience, the market really doesn't have any respect for that. You may get a quick up and down counter, but as far as like a big range day, you're not going to get that on FOMC minutes mean. Thursday, we got 8:30 news, hypothetically, for the U.S. dollars. You guys see right here, it says tentative. The reason it says that because the U.S. government is shut down. Now, hopefully, we can get the government to open back up before Thursday. That'll be perfect to start going back long on the DXY. So, hypothetically, we do have news at 8:30 USD, unemployment claims. And then Friday, you guys see right here, they put the NFP back on the board, right? So we probably see NFP happen this week, right? We all know NFP was supposed to happen last Friday. That didn't happen, so it may happen this Friday, but it still isn't set in stone yet. So you guys can see right here, it's a lot of things in the air. Nothing right now is guaranteed. No news releases is guaranteed. NFP is not guaranteed. Movement is not guaranteed in the U.S. dollar. So there is a lot of uncertainty, right, from retail to commercial traders, hedge fund traders, big banks. It's a lot of uncertainty right now. But in my opinion, once again, like I said, I'm going to be focusing more on the cross pair. So with that being said, we're going to be looking right here at Tuesday, right? You guys see very, very important meme. I did my research last night on this meme too. This meme happens every single year on the same day. And it really sends the market. Don't take my word for it. Just go back and back test every single year. October 7th, 2024, 2023, 2022, 2021. Do your own research on it. You come up with your own bias from that. So with that being said, let's go ahead and get right into the charts. Somebody said something in the chat. Let me make sure we got no questions in here. Once again, I try to I'm gonna try to go through this real quick. I don't want to really make this long. And then I'm gonna answer the questions at the end. We can do some teaching at the end. So I'm gonna move my thing here. So first, let's start off with the JPY pairs, because those are gonna be the ones that I think are gonna do that. Let's see, man, guys. So right here, looking at NZD JPY, the first thing that I'm noticing is that once again, I'm coming into this week with what? I'm coming into this week with the narrative that the JPY is gonna be weak. So that means that I want to see the low of the week made on NZD JPY, and I want to see it continue to keep rallying to the upside. Now, the first thing that my mind jumps out to is going to be these highs right here. In my opinion, this is just a little bit too suspect right here. I think we still have a nice way to go for buy side. I think buy side will continue to keep getting purged on the upside on NZD JPY. Now, obviously, you can see price did come down, taking out sell stops here. So we had sell stops taken out. So liquidity has been purged, right? Liquidity has been purged. So after the liquidity is purged, the only thing I want to see now is a form of displacement, right? Either on a daily time frame chart, 8-hour time frame chart, or the 4-hour time frame chart. Simple displacement. Then I want to see price come back down inside of an inversion fair value gap, optimal trade entry, regular fair value gap, breaker block, propulsion block, whichever entry drill fits you the most. But obviously, you guys know, in my opinion, I'm looking for an inversion fair value gap. So right here on the daily chart, on NZD JPY, my narrative is that prices came down, taking out sell stops. my opinion, I think that we're still bullish on NZJPY. I think we will see another run for buy side liquidity until we actually start dumping again, right? So once again, my narrative is that I'm bullish. Price came down, taking out daily sell stops. So we just had a daily liquidity pool taken out. Once again, this isn't a 15-minute liquidity pool. This isn't a 1-minute liquidity pool. This is a daily sell side raid. So whenever we have a daily sell side raid, I'm going to be automatically looking to go against, that move down. So this initial move right here, think about it now. This initial move right here, people still selling here in this leg now. So I'm going to be looking to counterparty them and go against them and take out their positions. So I'm going against what the market is showing me. Right, so with that being said, now we got our daily sell side raid. Now I'm going to drop down to my 8-hour time frame chart and my 4-hour time frame chart. And this is how I do my top-down analysis. I don't use the 1-hour time frame chart on Sunday. I'm not using the 15-minute time frame chart on Sunday. I'm not using the 5-minute time frame chart on Sunday. All of that is useless to me. I'm looking at higher time frame charts. I don't care what lower time frame is telling me on a Sunday. I want to see what's the big picture. What is these markets doing on a weekly, daily, 8-hour, 4-hour. Right, so that's how you guys should be doing your analysis. So we're going to drop down to the 8-hour time frame. So on the 8-hour time frame chart, as you guys can see right here, once again, this same liquidity pool has been raided. Now right here, we do see that price has created a nice 8-hour fair value gap right here. If we got any questions about that, let me know. Our time frame chart. So let's go to our 4-hour chart and let's see, do we see an inversion fair value gap? Well, what's the first thing that, if you got the eye for it, the first thing you should be looking at right now is going to be this 4-hour inversion fair value gap. Why did it just do that? 1 second. Let me go back. So right here, what do we have? We have a bearish fair value gap right here. So I'm going to draw it out. So this is a bearish fair value gap, right? So price came and filled in the bearish fair value gap 1 time, 2 times. Right here off this candle, why did we close outside of this bearish fair value gap? Should be asking yourself that question. Why do we? So once again, if you guys are wondering how I analyze these inverse fair value gaps, it's simple. Whenever you say a bullish fair value gap or a bearish fair value gap get closed outside of it, ask yourself, why did it do that? If it's bearish, why did it not stop there? Ask yourself that. It's because we're not bearish, in my opinion. That being said, we're going to be using this as a inversion fair value gap, right? So you guys can see prices are already pretty much tapped inside of this inverse fair value gap right off the opening. So the moment 5 p.m. open, on Sunday today, you probably can't be seeing long positions, or what could happen is we could probably, trade down a little bit through here to make the low of the week, maybe on Monday or Tuesday, and then we continue to keep rallying. But we're going to be using this 4-hour, make sure I got it right here, yeah. So this 4-hour inversion fair value gap is going to be my PD array going into next week. So I'm going to be using this 4-hour inversion fair value gap on NZJPY to potentially look for long positions. Now, Ron, what negates this, Ron? If this 4-hour inversion fair value gap doesn't hold, how would that look? Well, I mean, it's simple, right? In my opinion, price has no business coming outside of the fair value gap that created inversion fair value gap. So this counter right here, I don't want to see price come here. I don't want to see that, because in my opinion, there's nothing to go back down there for. We already filled in this 4-hour fair value gap. We got a breaker here that's already been tapped, hit. So in my opinion, we have no business trading outside of the bottom of the fair value gap, right? So that can be hypothetically be your stop loss if you're looking to swing this position like I am. So once again, I'm bullish on NZDJPY using the 4-hour fair value gap. The narrative is that we had a daily sell stop run and we had displacement after that. So using this 4-hour inversion fair value gap for my PD array going into next week. So that's NZDJPY. Let's go ahead and continue to keep pushing through. We're going to be looking at odd JPY. So AUDJPY. Guys, I already know it's going to be the same exact narrative for JPY. So let's start with the daily time frame chart. Let's see, what is the daily time frame chart showing us? So looking here at the daily time frame chart, if we zoom out here, just kind of this old swing high down to its old swing low here, as you can see, we're kind of floating around equilibrium. In my opinion, I think that we have some room to go up on the upside to continue to keep going up for buy side before I start looking to sell. In my opinion, whenever I'm looking for sell positions, right? So just kind of a premium and discount teaching too. Whenever I'm looking for a premium market to look for potential long positions, obviously you guys know we got news at what news on Tuesday, right? So we could potentially see the low of the week made on Tuesday, or the low of the week we made on Monday. What's going on? Y'all come off mute. Come off mute. If you got a question, come off mute and just ask.
I was just gonna ask, what makes you know that that's the point that you want to kind of measure the fib from to get that premium and discount?
That's a good question. So there's multiple ones you can use. The one that I like to use, I always teach. I was always taught, when you zoom out and you look at so right here, this is gonna be our last swing high. Notice, bro, how price is not traded near here. It hasn't traded near here in freaking months, right? Probably. Yeah, this happened on this is the 24th of the year. Price hasn't traded traded back up here for a whole year. So I'm going to be using this as my real strong swing point, because price hit here and then turned on the dime. It has not returned back up there. I suspect the market will try to gravitate towards back up there. It doesn't have to be now, but I know in the future that this market will try to pull towards this old swing high. Same thing with this swing low, right? So this kind of was like, this isn't to use, your long-term premium discount. Now, like I said, you can use so many other swing lows and swing highs to get, a better premium discount, right? You could have did it like this. You could have zoomed in here and just said, okay, I'm going to use this swing low here and this swing high right here. You could have just said, boom, right here. 1 second. I don't know why it's acting slow. You could have played like this right here. If you played it like this, price is in a premium. So if you looked at it like this, if you use your swing low here to this swing high, the price is in a premium. So it really all depends on how you look at it. Since I'm looking at this from a more long-term standpoint, I want to zoom out and really see, okay, where are we on the daily time frame chart? Now, to answer your question, if I was on the 15-minute time frame, I would have did it this way right here. How this second example, using this swing low to this old current swing high, if I was on a 15-minute time frame. But when I'm trading on a daily chart, I want to get the biggest picture I can get, so I can really know what are we really trying to do. Because I don't want to get caught up in, we're in a premium, but we're in the long-term discount. I don't want to get caught up in that. So I'm going to the higher time frame chart, zooming all the way out, identifying the most obvious swing high and swing low where price has not, traded, near. And I'm going to be using that as my swing high and swing low projections. But once again, there are so many different ways that you can do the swing high and swing low to get your discount and premium. That's a good question too. So going back right here, guys, on RJPY. Once again, I am bullish on RJPY, right? As we can see, in my opinion, this is how it this week. I think that we still have room to go take out buy side right here. In my opinion, we really haven't had a significant run, a real clear run on buy side. I think that these old highs will get targeted again, for the simple fact that the JPY has heavy news this week. That's why I am betting that the JPY will be negative, because we have heavy news on it. Now, if we didn't have this news on JPY, I wouldn't even be engaging in these pairs at all. But the fact that we got JPY news on Tuesday, that's really important. I think it's going to be a negative release to continue to keep sending us higher on anything with JPY. So we had seen price come down here, taking out what? We had these short-term lows taken out here. So we had liquidity purge, right? So we had a small liquidity pool purge here. This is a daily time frame chart. So now I'm going to drop down to my 8-hour chart, and I just want to see if I see any type of inversion fair value gap, or if I see, any type of displacement that fits me. Now, on an 8-hour time frame chart, I don't see anything that really suits me. The only thing that I see is that price is holding here. So we have right here, this is an 8-hour fair value gap right here. If you drag this out, 8-hour bullish fair value gap. Price came and traded through it, yes. Did it close through it? No. Price is looking to hold here. So I'm expecting price to hold here. Now we go to our 4-hour time frame chart. Let's see what our 4-hour time frame chart says. Looking at our 4-hour time frame chart, what do we see? Well, if your eye is trained, you automatically should be saying this is a bearish fair value gap, right? We had a bearish fair value gap. What did price do? It went and closed outside of that. Came back down inside of it. So now we should be expecting price to react off this 4-hour inversion fair value gap. Also, we had a 8-hour bullish fair value gap. So we got two PD arrays that's lining up right now on JPY. So once again, with Sunday opening, we can see a rally up, or we can see price push down a little bit more to make the low of the week, and then we should be looking for long positions to offset on RJPY. Now let's go over targets on RJPY. Obviously, I see it right. We have a very I don't want to see price trade. I don't want to see price trade outside of here anymore. We don't have to. I don't really see a reason to trade all the way back down here if we're going to go bullish. So stops will be here, and then you simply aim for a 1-to-1 depending on your entry. So that's RJPY. Let's go to the GJ right quick. Then we're going to get inside of the USD pairs, right? We will do USD analysis. We're going to do that last, though. We're going to do it last since it's not really my focus. Now, GJ is going to be the best one. Shout out to Peter. I think Peter is in here. I got my analysis from Peter. I'm pretty sure you guys seen him post in the Telegram chat. Matter of fact, we can go to it right quick. We'll use his analysis. We pretty much trade the same. So we're going to use Peter analysis here.
I was going to ask, why are you so sure that the JPY news that's going to come out is going to be negative?
Well, from my opinion, whenever we have JPY news, I'm not going to say it's always negative, but it's more negative than positive, right? And I was doing a little bit of more fundamental analysis. The Japan economy is kind of looking the exact same as the United States, right? Financial problems. They got a new strand of COVID trying to come out. They're trying to, make that narrative up again with fake COVID. They got that trying to go on in Japan too. So if you do a little bit more research, they got a lot of stuff going on over there too. The same way it's going over here in the USA, it's the exact same thing in Japan too. So I'm with that. With all that being said, I'm betting that this market, it's gonna come out with negative news to send it lower. Now I can be wrong, right? I can be wrong, but that's why I have I have things in place that if I am wrong, that's fine. I'll just reverse my position. So looking at here, GJ, we're gonna look at Peter chart. We're gonna do some analysis on Peter chart here. He got a GJ here. Very, very, very nice analysis, brother, as always. Now he's using the 4-hour time frame chart. I'm gonna go to the daily time frame chart and give you guys a reason why I'm bullish. But just looking at Peter's 4-hour time frame chart, all you guys should be saying the same thing. First and foremost, the first thing we see is what? We had liquidity purge. Right here, you guys see my cursor. I hope you can see my cursor. Let me zoom in a little bit more. We had liquidity purge off this low. Look at the blue box. Focus on the blue box. What is this blue box right here? This is a bearish fair value gap. What did price do? It traded through it. So when price comes back down inside of that, what? Blue box. Bearish inverted fair value gap. What do you expect price to do? It should get sensitive here and you look for long positions. So whether you want to, once again, if you want to swing this or if you want to wait for the 15-minute model, both. There really isn't a better way of doing it. It is whichever one fits you the most, swinging it or one 15-minute time frame. So good analysis, Peter. Very, very, very good analysis. But we're gonna go ahead, brother. Go ahead.
Hi, Lon.
I'm doing good. How you doing, brother?
Hi, Lon.
Go ahead.
Great. Would you mind looking at the JPY index?
JPY index?
Yeah.
What's the oh, you're talking about futures. Talking about the futures talking about the futures contract of it?
Yeah.
Alright.
Yeah.
So we're gonna go to 6J. This is the JPY futures, guys. You guys didn't know this is JPY futures. My data is delayed. I don't know. Let's see what we got. So looking here, futures. Oh yes, this is perfecto. What do we see? First thing that I see is that we have a bearish daily fair value gap. So can we all agree that this is a bearish daily fair value gap? Yes. What did price do? It closed through it. So now price is what? It's coming right back down where? Inside that bearish inverted fair value gap. So that means that we should get sensitive here. We should get sensitive. Now, as far as targets, in my opinion, We did not fill in this void imbalance all the way. So this is going to be the first target right here. Is going to be this simple void imbalance. I want to see this whole void imbalance filled. Next, in my opinion, the next target is going to be this old high. All right, I want to see if we can go up and get this old high here potentially. So this will be a nice buy side liquidity pool to target here on the futures, on the yen futures. So the price trades through this void imbalance, partials, take closer trade, do all that good stuff, take money out the board. But this is my expectations for 6J. Now, Peter, did we have the same bias here, or were you looking at anything different?
For me, I'm looking at the 4-hour time frame.
4-hour time frame. Okay.
I'm expecting it to go down.
Okay, let's look at it. Let me remove this off my chart. All right, so he said he's looking for the market to go down. Let's go over that and let's look at supporting factors for that. All right, so clean my charts up here. 4-hour time frame chart. Let's see what do we see. The price come fill this in? Not really. Didn't. Well, yeah.
The price violated the 4-hour inversion fair value gap.
4-hour inversion fair value gap. 4-hour. Can you join the screen where you see that? If you can, on your phone, use the zoom tool and draw on the screen on what candlestick that price is reacting off of. If you say the 4-hour inversion value gap, I'm looking for it. I think I see. Oh, you're talking about this one right here?
You might be checking it. Yes, that one.
Oh, okay. I got you. Yeah. I got you. Yeah. We could potentially see it. Yeah. I mean, like I say, we could potentially see price react off this 4-hour inverse value gap. They go make the low of the week. 100%. Right. Now, long term, I do think it will continue to keep going up. But that's the thing with the JPY futures. And I got a question for you because sometimes I do get this confused. If the JPY futures is going up, that means that NZJPY is going down. If I'm not mistaken myself, I know with the futures it's inverted.
Yeah, that's true.
Okay.
So for the JPY future, I'm looking at it this way. I'm correlating with DXY. If DXY will go down, JPY will go up.
Okay.
So what you are looking for next week? What I'm looking for is we violated that 4-hour fair value gap. So I expect the 4-hour low to be taken out before we go up.
100%.
So that's the target.
Yeah, 100%. The DXY, and that's why I say I was gonna hold my bias for the DXY until the end, because what's going on right now, guys, with the DXY, it's going to affect the cross pairs too. So they're gonna affect JPY. It's gonna affect CHF, Euro, right? So if the DXY is, let's say the DXY just start plummeting down, then everything with the Euro gonna go up. Euro JPY gonna go up. Euro NZD, the Euro is gonna explode too. So that's why I say right now the markets, the conditions that we're in right now, is gonna demand patience. I really want to hold off on saying the market's going to do this or it's going to do that. I'm holding off. I'm refraining from using those type of words right now until the government is back open. Because who's to say it opens? What if it never opens back up? Then we're all doomed. Now we all have to, probably have to switch and do things a little bit different with our trading. Who's to say that? We don't know if it's going to open back up. It can just close for a whole year. So I'm just factoring in all those things that's going on outside of the trading world, right? Fundamental analysis is what I want to talk about to start the call off. So
I was gonna ask, but that's why we kind of just gotta play this a little bit more patient because, for example, Peter is saying that he could see it go down, which does agree with what you're saying about the news and the fundamentals on the JPY. But at the same time, on the long term, we're seeing it go up.
Right. So, like you said, number one thing is gonna be patience. We need to really see price close outside of fair value gaps. If you're gonna be trading inverted fair value gaps, you must wait for price to close outside of it. So that means that you can't be trying to cherry pick and get in and say, oh, I think it's gonna close outside, so I'm gonna get in prematurely. These are not the market conditions to do that. There are times where you can anticipate a 4-hour or 8-hour inverse value gap to get closed outside of. In my best opinion, though, I'm telling you, it's best if you just wait for price to show you, to actually show you, hey, I'm finna get ready to close outside of this. Now you can go long on me. But I don't think you should be trying to predict or jump in front of the move before it actually happens, if that makes sense, right? For these market conditions. So, like you said, Peter said going up, I see it going down. But I think of the Japanese yen. But it's inverted, right? It's inverted. Because I know with SJ, which is the Japanese yen futures, and U.S JPY, they're inverted too. And I had a problem with my bias a couple weeks ago where I was getting my bias wrong because I was looking at the yen futures, and I was trying to do the same thing on UJ. But I had the right bias, but I was looking at it the wrong way. So that's why I deleted it off my watch list, because it was confusing me. I didn't know if I was getting confused. So transcribe. What does transcribe? Okay. So like I was saying, I'm focused on GJ, AJ, and JPY. Right. Looking at GJ here, I'm going long on GJ. Right. Talk about GJ here, I'm going long on GJ. 4-hour inversion value gap. I want to see price come back down inside this inversion value gap, hold, and rally. Odd JPY, same thing. I'm bullish on odd JPY. We got a 4-hour inversion value gap here. I want to see price open up today or tomorrow or Tuesday, and I want to see explosive moves to the upside. Same thing on NZD JPY. Right? This one isn't the best, but I like it a lot. 4-hour inversion value gap. Price did what? I waited for price to close outside of it, so now I have my AKA confirmation. So if you one of those guys that need confirmation, now you got your confirmation on NZJPY. Price close outside of the 4-hour inversion value gap. Come down, use it as support, real support and resistance, and we should rally to the upside. So that's my bias on NZJPY. Now let's go into what everyone is here for, which is going to be the DXY. I'm going to go ahead and say it right now. I'm still bull in the dollar. I know there's a lot of things going on. I typed this in the Telegram chat a couple days ago. I said that I think that this government shutdown is a trap. I think that they're trying to promote fear for the dollar. They want everyone to think, oh, the dollar's about to crash. Yeah, it's about to crash. You know, the world's about to go to shit. And it may happen. But just from what I've seen in these markets, trading for 6 years, every time that fear-mongering aspect happens, the same thing with the stock market. I'm pretty sure the guys that trade the stocks, they were saying the stock market's from the crash a couple months ago. The stock market's at all-time highs right now. So for the ones that say, oh, the stock market's about to crash, just take all your money out, they got cooked. Prices at an all-time high. They missed out because they let fear. They let the news. I don't look at CBNC. I don't look at, news release and say, oh, the news said this. Fuck, they're lying. These people are lying. These people are manipulating price. They're doing it on purpose. They want people to sell for smart money to buy. So while everybody is saying, oh, the dollar's about to crash, these big banks, they're loaded, in my opinion, and I can be wrong. And if I'm wrong, I can take it on the chin. And in my opinion, I think these big banks are loading up on the DXY to go higher because they know they got fake. So we got fake COVID coming back out soon. Sooner or later, they're going to have another fake COVID, right? They're talking about the microchips trying to put in people. They got all that going on too. Jobs, all that shit. It's hard to get a job, keep a job, all that. So all of that promotes what? Well, that means that the U.S. dollar's going to crash. If it's going to crash, it's going to crash when you don't expect it. They're not going to let you take advantage of that crash. Because when the market crashes, you can make millions from that. If the DXY dumps and you take advantage of that, you can make millions from that one candlestick. Same way with it going up. So in my opinion, I think what they're doing right now, they're holding price. So they're holding price in one. So let's go to the daily time frame chart. Because I always tell my students, forget the news. What are the candlesticks telling you? The candlesticks are going to tell you what the news is going to do. That's why I say I don't really look too much in the news and say, oh, CNB says it's going down. No, I'm not worried about CNBC. I'm worried about these daily fair value gap we're in. I'm going to delete everything on my chart. I'm going to go look at the question. So since I want to ask a question, I'm going to go look at that. But I want to do some real deep analysis here on DXY of why I'm bullish. And I'm going to tell you if my bias is wrong, what's going to happen. First and foremost, if we look at the dollar, we have taken out buy side. Buy side is the only thing that has been taken out for the last couple of weeks, months on the DXY. I'm sorry, sell side. We took out sell side. So we had sell side right here off this low. So this old low right here, this old low was made on July 1st, 2025. It got swept. So this isn't some little 15-minute low, little 1-minute low. This is a old monthly low that got swept. Look at the reaction after price took out that old monthly low. This is why I tell you guys need to have these things marked out. You need to have the monthly lows marked out, the monthly highs marked out, because those aren't something that's random. When price takes out a monthly high, and once again, guys, when price takes out a monthly high, right? So price has been going up, it's going up, deep premium. It takes out a monthly high. What do you think is going to happen after that? Do you think it's going to continue to keep going up? And just disrespect that monthly high? No, we're gonna see some form of retracement. Those right there, guys, are what I call easy money trades. Now, the con of that is it may take a little minute for it to get there. That's the only con. So if you're impatient, it ain't gonna work for you. But if you're patient and you can sit on your hands and wait for those monthly lows, man, your hit rate explodes. Now, you may not be classified as a day trader, but who gives a shit about that? As long as you're making money, I don't care if you're swing trading. I don't care if you take 2 trades in a month. As long as you're banking real profit, that's all that matters. Because I know individuals that trade every single day and they still work. But I know individuals that trade 2 times out of the month and they don't work. And they're making $20K, $30K a month off those 2 trades because they're taking high quality trades. So just keep that in mind. Price took out a monthly low. We had, it makes the most sense. So with that being said, we're going to go use our fib tool. So price is not quite towards the 62 with the wick, but if you use the body, price is almost at the OTE. Now, I'm not going to be using the optimal trade entry for my entry drill. I'm going to be using this fair value gap for my entry drill. Business to go bearish yet. The market hasn't told me to go bearish yet. I'm not going to say, well, the market's about to crash. I'm going to just sell and hope that price closes, outside of this daily fair value gap. I'm not doing that. When price closes outside of this daily fair value gap, then yes, I will go bearish on the DXY. Until then, I'm bullish, and I have no other reason to not be. I'm bullish. Price has been playing around right here off this daily fair value gap. Obviously, we know why. Government shutdown, everything going on in the real world right now. Once again, like I told you, I think that they are trapping people to sell. That's what I think, and I'm going to stick to that. I think that they're trapping people to sell. Why? Why do I think that? Because look right here. What do we have right here? Trendline liquidity. If I'm Goldman Sachs, one of these big shots, if I'm going to sell, I'm selling up here. I'm not fucking selling down here. And if it dumps from here, then guess what? I miss it. I'm fine with that because I know it's not A+ trade. So once again, if I was a big shot or a bank, I'm selling here. Why would I sell down here when I got stops right above my entry? And an open inefficiency that could potentially get traded inside of. So if the DXY is going to crash, it's going to crash somewhere up here. Why would they crash it right here? If they crash it right here, everyone that sold will make money off this because price hasn't really took them out. Now, we know that ain't going to happen. The market doesn't roll like that. Liquidity, we need to see manipulation. So in other words, I am bullish on DXY. I'm bullish until price manipulates buy side. When I see a clear run on buy side, then maybe I'll think about switching my bias to bearish on the DXY if, things in the world supports that, right? If we run into COVID, right? If COVID comes back out, bearish on the DXY. If they do the microchips this year, bearish on the DXY. If the government does open back up, bearish on the DXY. It's as simple as that. Go look at what happened when COVID came out. And you can do this. Everyone, if you got TradingView and you use replay tool, go back to when COVID came out. Look at what the market did when they start talking that COVID shit. It dumped. And it dumped off these PDRAs right here. Inversion fair value gaps, bullish fair value. It dumped off that. It didn't dump off what the CBNC said. No, it dumped off what the candlestick said. So bullish on the DXY. Let's keep going right quick. And like I say, I'm gonna go through EU and GU. Then we're gonna open it up for questions, teachings, all of that. So let me get through it right quick. So GU, we're gonna let's do EU first. Do EU. We're gonna do EU and GU. So EU, same thing on EU. It's simple. We ain't gonna overcomplicate nothing. I already got it on the screen for you. So boom, it's already on my screen ready for you. If we look here at EU, that same monthly high that made on July 1st, 2025, it got purged. Like Aaron said, he agreed. When price took that out, look at the reaction we had. Took it out and it dumped. So if EU goes and closes outside of this bearish trade gap, then what does that mean? We're not bearish on the, we're not bullish on the dollar. We're gonna see a rally on the EU, a strong rally if it does that. Now, in my opinion, I think that we will hold here. I think that EU will hold off this bearish trade gap. So with that being said, I'm going to be looking for supporting signatures to hold here. So I want to see bearish inverted trade gaps. I want to see regular trade gaps on an 8-hour time frame chart, 4-hour time frame chart. So with that being said, I am bearish on EU. I want to see the market turn here. If the DXY and the government open back up, I see us turning here. We got trend line liquidity. So we got trend line guys here. Look, they're bearish on the EU. Let's go to GU right quick before we open the board up for any questions. Let's go to GU. It's not GU. GBP USD. All right, so we got GU here. Now I'm gonna be honest, GU isn't the best, right? I always stress that GU really isn't I don't really have a thing for GU, but I know that GU likes to, obviously it respects what the DXY does. In my opinion, GU is like NASDAQ. It's like GU is the NASDAQ of Forex. It's manipulative, right? Price can go through inverted trade gaps, come back down and trade through it. So I'm always careful on my bias on GU. But just going off strictly price action, what I'm saying right now, right? And I could be wrong. Once again, I could be wrong on GU, right? I can be absolutely wrong off this pair, and I'm okay with that. Notice how we didn't take out buy side here. So on DXY, we took out sell side. EU, we took out buy side. But notice how GU didn't necessarily take out this strong buy side pool here. So that old monthly high, that wasn't taken out on GU. Right? So when I see stuff like that on GU, that's what kind of makes me, kind of stay away from it. Because what that tells me is, that means that GU has a little bit more room to go up. Now, with that being said, what do we see right here? First thing we see is what? Bearish daily fair value gap. If we're bearish, I don't think price should close outside of this. But what do we see above that? A open bearish fair value gap. So there's two scenarios here on GU that can potentially happen. We can open up, trade through this bearish inverted fair value gap. We're going to trade through it. I think price comes here and it stops on the dime on GU. So I think GU may be a little bit more exaggerated to the upside and then probably see a dump. Or we can just see a straight wick. We can see the market wick up here. Nobody's closed though. Nobody's closed. We can see a wick and it dumps. What's right here? Equal lows. These are equal lows. Equal lows all day. So we can see the market turn from here and go down, or it can push up here and turn and go down. But in other words, I'm bearish on GU. If price closes outside of this bearish value gap, we will see small longs until price gets up inside of this last value gap. Once price gets up inside of here, you really want to be hunting shorts. Now, if price just goes right through this, then obviously now we're really in a bull market, and that means the DXY is probably going to crash, and the market will continue to keep going higher on GU and EU. All right, so questions, guys? Any questions about those analysis? Right, I'm gonna go.
This isn't necessarily about the analysis, but how would you say somebody should go about, I guess, making case studies and really just understanding the market more, as far as like how in 2020 the DXY was just dumping, and then even this is a similar scenario. Like, how would I go about understanding history a little bit more? And just...
Well, that's a good question. So, when I say back test and case study, I'm not necessarily saying go back and back test the entry model. He said, yeah, I'm not saying go back and back test the model. What I'm saying is go back and look at what price did in the past. So obviously, with everything going on in the real world, we're kind of going into the same 2020 market. Now, it may not happen this year. We may see 2026 turn into a new 2020 again. It may just be a straight 2020 market where the market just goes in one direction the whole year almost, right? If you go back, once again, if you guys go back and look at your charts from COVID, 2020, when COVID came out, look at the months after that. So until COVID went away, look at how the market was going in one direction that whole year. It was going straight buy side, straight sell side, depending on what pair you're looking at. So when I say case study, that's what I'm telling you guys to look at. Go back and look at what happened in the past and just simply compare it to what's going on right now. Now, if there isn't anything going on right now in the world that, support that the market should be going in one direction, straight shot, then it's useless. But it's very important that you guys go back and look at what happened during COVID 2020, because that's when 2020 was the last time we had a lot of shit going on in the USA. Jobs, mask, can't work, you had the PPP loans going. You had all type of stuff going on in 2020 that rocked the market. We're going into that same environment now within 2025. Once again, we got a new COVID they're talking about bringing back out. Right, they got the microchips trying to be placed inside of people to work. That's happening in UK and Japan. That's why I'm bearish on Japan. It's going to happen in the UK and Japan before it happens in the USA. So that's why.
What is that? My fault, Ron. What is that? Like a robot in your head or something?
No, it's like, you gotta do your research on it, bro. It's like it's a chip that you're gonna be mandated to take in order to work. So if you want to go to work, you gotta take that chip. If you want to spend money, you're going to have to take that chip, right? It's called Central.
Oh,
yeah, just do your research on it, bro. It's been, like I say, not trying to get into politics here or, be a theorist. I don't care about that stuff. Only thing I care about is inverse fair value gap and fair value gaps, because that's what's gonna rock the market. I don't really too much care about a belief in anything. But that's what's coming. They're going to try to push that. Once again, it's fear. Once again, it's all fear mongering, guys. Listen, and I'm telling you, this is a gem from the drop. Whenever you see everyone scared to buy, that's when you buy. Just look at crypto. Crypto is a prime example, guys. I'm telling you. Everyone is saying buy Bitcoin now, but nobody was saying buy Bitcoin. It was at 10,000. Nobody was saying, hey, buy Bitcoin. Everyone's saying buy Bitcoin now it's at 120K. That's not how it goes, right? You want to make sure that you're in these moves before it happened, right? If you fell for the fear mongering with Bitcoin, then you probably missed out on the rally up. On ETH, XRP did the same thing. All the crypto started rallying at one time because everyone was saying sell it. Oh, crypto's going to crash. Oh, crypto can't be, everyone was saying that crypto can't be traced. They were saying, got blockchain. They were saying the blockchain can't be traced. So everyone was scared about crypto and it exploded. Let's use the stock market, for example. Trust me, guys. Don't take my advice from this stuff neither. Go back me up on that. Go do your own research. Look at the stock market. A couple months ago, earlier this year, everyone was saying the stock market's going to crash. The news, any news outlet you look at, they were saying the stock market is about to crash. Take your money out that shit. If you look at US 30,
Bitcoin, bro?
If you look at NASDAQ, they're at all-time highs right now. They're at all-time highs. So they fool everyone. Fear-mongering. So once again, guys, whenever you see things like fear or, that they're pushing that this is going to happen, that is the best time to buy. That's the best time to get positioned. Because that's what these big banks are doing. Goldman Sachs, Morgan Stanley, these banks. Do you think that these guys are saying, oh, my God, CBNC said it's going to crash, guys. Let's take our money out. No. Let's load up a position because they know that the average retail people like us, most people are going to be scared, shitless to even buy. And they're going to be buying it up. So that's my view on the market. That's how I look at the market, right? So once again, go look at a easy case study for that is 2020. Think about it, guys. So when you go back and look at 2020, I want you to keep this in mind of the fear mongering that was going on when you look at those candlestick charts 2020. COVID, jobs, unemployment, all of that was being lingered the whole 2020. And look at how the market responded to that.
So really, like,
go
I
ahead.
was gonna say, like a quick, simple way would be to think of when was there fear mongering going on in the United States, and then pay attention to how the market reacted.
100%. 100%. Now, like I say, 2020, in my opinion, 2020 was the last time we really had that fear mongering. When we had Joe Biden in office, it really wasn't that much fear mongering, in my opinion, to really try to, move the market really deep. But in 2020, yes, that was a prime example of fear mongering. That was a prime example of let's scare these motherfuckers shitless, and we're gonna buy while they're scared. That is a prime example of that. And my opinion, I think that we're gonna run into a market just like that at the end of this year. Early 2026, we will see we're going to see a market just like that. A lot of fear mongering stuff going on. So it's a good question right there. Going on, Peter.
Yeah, I agree with you. The analysis for DXY, the market looks like it's a very balanced one compared even with Euro. But for me, I'm looking at DXY on daily time frame. I'm seeing that it wicked up to, if you do the quad levels, up to 75% on Thursday, on Wednesday, Thursday 50%, and Friday 25%. So it's look balanced, and for me, I would look, if it crosses below 50% of the quad level, then I would be bearish DXY.
100%. Yeah, I'm with you, bro. Like I said, I'm with you on that analysis. Go ahead.
Yeah, now looking at the economic calendar, we only have major news for USD on Thursday.
Right.
So unless a deadlock is resolved between Monday to Thursday, that's the time I would expect DXY to rally. So for me, I'm looking at DXY and I'm seeing that we might weak out those lows, the Wednesday lows, before we go up possibly.
100%. I'm fine with that. I will allow the DXY to wick out. What I don't want to see, Peter, I do not want to see a body close outside of this February gap. I don't want to see no type of body close outside of here. If I see a engulfing candle close outside of this bullish February gap, then yes, I will switch my bias to bearish with confidence, and I won't second guess nothing. Until then, I have to remain bullish.
Yeah,
I have to. I can't say, oh, well, I think it's going to close outside of this bullish February gap. I'm going to try to get in early. I don't want to do that right now in these conditions. I want to really wait for the market to show me, okay, we're not bearish anymore, Ron. And now it's time to go bearish. Or we're not bullish anymore, Ron. Now it's time to go bullish. That's kind of what I'm waiting on. Now it's going to require patience from me, right? It's going to require me to be patient and wait. But like I say, I don't want to confuse anyone. To keep things very, very simple, I am bullish on the DXY until the market closes outside of this February gap. If the market does not close outside of this February gap, I will continue to keep going along on the DXY. The market could come down and take out last week low. Yes, if it does that, I still do not want to see a body close. So I'm with you, Peter. I'm with you. I'm very open-minded right now to the market, right? I'm not just saying, oh, it's going to do that and it's not going to do anything else. I'm not now in the past. Now, admittedly, in the past, that's how I do my analysis. I'm very, very, very one-sided, right? I'm very, 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 I'm one-sided. When I see something, I want it to happen. But I'm humble enough to understand that the market we're not in that condition to do that in the market right now. You have to be patient.
Would you like looking at pound on 4 hour? Maybe I hear your suggestion whether the 4 hour inversion fair value gap might hold.
GU?
GBP USD on 4 hour.
GBP USD on 4 hour time frame chart. So it's also too, guys, while we're on this call, it's very important that you guys are have your trading view pulled up looking at this too. Right. You can just, I know a lot of guys like to just use my screen, but pull up your own chart so you can kind of get a more feel for what we're talking about here, and not just look at my screen. When you're looking at your own screen, you know, it feels a little bit different when you actually see it on your own trading view chart. So you said 4-hour inversion fair value gap. Are you looking to go bearish or bullish on GU?
Bullish.
I see exactly what you're saying. I'm glad you said that. We got a 4-hour bullish fair value gap right here. Very, very, very nice. A nice reaction we have right here. Nice reaction off this. We actually tapped inside of it on Friday. Very nice. So you could have scalped this. Matter of fact, let's go to 15-minute time frame. I think we had a bullish 1-shot 1 kill on Friday, if I'm not mistaken myself. If I'm not mistaken, we had the OTE for on Friday. Yes, we did. Yeah, so we had agent low purge. After agent low was purged, let's see what we had here. So one second, let me change my. Yeah, we had a 1-shot 1 kill. Did anyone take GU last week? Look at that. So we had price. So the narrative was what? The narrative was that we had a 4-hour inverse fair value gap. The market came down, taking out agent low, London displacement, OTE retracement. Look at that. Rally. 2R, 3R book right here. So I'm with you, Peter. That's why I say I'm very open, especially on GU. I'm very open-minded on GU because I know that GU has a little bit more room to go higher. So I'm not going to sit here and say, oh, it's not. It has room to go higher, especially since it didn't take out that old monthly high. We definitely got a little bit of room to go higher. So I'm with you on that. So good questions, guys. Got any questions, guys? This is, once again, we're going to stay on about 30 more minutes here. Well, 30 minutes.
Would you quickly look at USD CAD?
USD CAD, all right. Now, USD
On
CAD.
4 hour.
Okay, yeah, I thought it said USJPY. USDJPY is a funny one. But yeah, let's go to USD CAD right quick. Any questions, though, guys? You guys type in the chat. You guys got any questions, man? Concerns, you know, anything you guys want me to go over, I'll do that. So USD CAD, let's look at USD CAD. Let me clear my charts up a little bit because I had a lot of stuff going on USD CAD. All right, talk to me, Peter. What do you see? Matter of fact, before you even say it, brother, I already know what you see. You ain't even got to say it. I know exactly what you see. Correct me if I'm wrong, but you're looking at this inverse fair value gap. Right?
That's true.
Was I right?
Yep.
Yeah. We seen price. Yeah, we seen price taken out buy stops. So we had buy stops purged on USD CAD. After buy stops was purged, what did we have? We had a bullish. One second, mine. So we had a bullish fair value gap here. Seeing price close outside of it. Price now comes back inside of this bullish and fair value gap, turn to inversion. Should be using this as resistance to go lower. So USD CAD do look good. In my opinion, what I think is going to happen, I think that we will use this as resistance. I think we come down and make the low of the week, bro, and continue to keep going higher. Go take out this suspect high. That's just my analysis. But I'm with you. Yes, we do have a 4-hour inverse fair value gap that will be respected. You could scalp off this and make a quick 3-4R just off this simple move here, you know, and you know you can make profits off that. So I'm with you.
Yo, Ron, check the weekly on USD CAD. Because I was seeing a weekly imbalance. I was thinking we might retrace into that weekly imbalance and then continue higher.
Weekly imbalance. Oh, look at this right here, bro.
Yeah.
Look at this right here. What we had? So we had a bearish weekly fair value.
And we're holding price.
What did price do? Price went and closed outside of this bearish weekly fair value gap. What did price do last week? Price came back down, made the low of the week. What did price make the low of the week? Inside of the inversion fair value gap.
Yep.
Where is price headed to? We got a good way to go. This candle can be retraced inside of. So quick little gem, Ben. What I like to do, whenever I see these big engulfing inefficiencies, mark out 50% of it. So do 50% of it. So using the body, you can use the wick if you want to, but the body is, in my opinion, the body is more accurate. Use the body. Then you're gonna do the discount fib tube. You can turn it whatever color you want to, but take off The only thing you're worried about is the point is 0.5. You ain't worrying about everything else. 0.5, make it any color you want. This is premium discount. So when price trades above this, then yes, you can look for sales. But until then, you should be looking for nothing but long positions because price is below this equilibrium. So this is, once again.
But bro, you see that buy side liquidity though? Like it's not been rated or anything, you see?
You talking about here or you talking about this high
here?
Here?
that one right there.
Right here?
Yeah,
I'm with you. I'm with you, bro. Like, that's why I say we should, with the DXY supposedly being bullish, USD cash should continue to keep pushing up until we take out this high and we get above equilibrium. Then, yes, started on the, 1 second, let me make sure I got everything right. Started on Wednesday. No, 29th. 29th is where we started.
So how long did you hold this trade, Warren? 4 days? 3 days?
Nah, no, that's the thing. I got my first position got stopped out. So my first position, I was in this trade for about a couple hours and it stopped me out. Now my last position that I showed you guys, I was in trade for 2 days. So once again, I tried to go long. It's simple. I tried to buy off this 8-hour fair value gap to start the week off. So I bought the moment price came down inside the 8-hour fair value gap. I bought. Had my stop here. I got stopped out on Tuesday. So what I said to myself is, okay, price just stopped me out. But once again, this is what I said, but I know that my bias is still intact because the DXY is still showing long positions. So what I said to myself is, okay, we're going to use this one here. So this is the last chance. And keep in mind, this is exactly what I'm saying to myself. When price came down to this 8-hour fair value gap, the first thing I said was, this is the last chance for USD If USD does not respect this one, then we will go lower towards these old lows. So I said to myself, okay, I'm going to go long here. So keep in mind, I don't think I was doing last week. I was buying an 8-hour time frame. I wasn't doing anything else. I was just buying 8-hour time frame. That's it.
You were buying on like the 8-hour time frame, and then
I was just buying. I was just buying on 8-hour time frame.
So there's difference one when you buy on a 15-minute and then 8 hour.
No, I talked about this too. The only reason that I'm going to swing trading is because of the location I'm at right now. So it's easy for me to take swing positions because my time zone is different from you guys. Like right now, it's in the dead middle of the night. It's dead middle of the night where I'm at. So my time zone a little bit different. So with that being said, it's a little bit more easier on my psychology to take long-term positions and just hold them by the day or two, and see if my bias is correct. Now, I'm not saying that 15-minute one-shot, one-kill don't work. Obviously, that's my main go-to bread and butter, right? If I was in the
No. We understand
if I was in the USA, I would be waiting for price to show the 15-minute one-shot, one-kill. So what I would be waiting on, price to come inside my Peter rate in the 15-minute model form. But since I'm not in that environment to do that, I'm just strictly buying the moment it comes inside of it. That's the only difference that I'm doing right now. So this is how you guys use higher time frame PUAs. You see that we have an 8-hour fair value gap, right? When price comes down inside of here, you're gonna drop down to your 15-minute time frame and wait for the one-shot, one-kill model to form. If the one-shot, one-kill model does not form, then there's nothing for you to do. But if you want to take advantage of the higher time frame charts or the long-term trades, then you would just strictly buy the moment price come inside of it. You're not going to wait on anything else but that buy. So hypothetically, this is how I've been doing. I just been straight buying in the moment it comes out of here. So I'm not waiting on the 15-minute one-shot, one-kill for this type of style. But if I was trading the 15-minute one-shot, one-kill, which I do, I would simply wait for the market to show the one-shot, one-kill on the 15-minute time frame. And that's the result. So I hate take profit in one trade. 2R. A little bit more than 2R.
Man, that was a dangerous. Ain't gonna let that shit look fire.
So you see, to answer your question, Peter, my psychology behind this trade was this 8-hour fair value gap has not been traded inside of. I know we're going to get some type of sensitive reaction off of this. Now, it may not go all the way to the moon, but I know this, brother, you seen, I mean, it's obvious. This one candle can change your entire life. This one candlestick right here. If you got the right risk, if you got the right size capital, this one candlestick and you're through.
What'd you go for on this, 2R?
2R. I went for 2R and I realized my real money. That was not a prop firm account. Prop firm account wouldn't even let me do that. It was my own real money. I risked 15 grand. That was about half of my entire account. Had my stop right here at this low. If price would have came and took my stop, I would have been okay with that, because only thing that would have told me is, okay, we're not bullish. So I would have just reversed my position with confidence. But my stop was at the end of this fair value gap. So you can see price hit it to the tick. Now let's go to the 15-minute time frame and let's see the model form in the 15-minute time frame. Did the model form in the 15-minute time frame? Yes. So once again, on Wednesday, price, so this slash rectangle box, that's that 8-hour fair value time on the 15-minute one shot one kill. I think it may have swerved. Let's see. Yep. It swerved. So you would have got missed. So your entry would have got missed. But did the model form? Yes, it formed. It just didn't feel you. So if you wanted to wait for price to come inside of your POI, this is exactly how it should be reacting, guys. So if you guys want to do a case study or a journal, anything like that, this right here is a prime example of when the market comes inside of a higher time frame POI, this is exactly the type of reaction you would like to see from your trades for the model form 15-minute time frame. Aging low, line displacement, no OT retracement. And what can we do about that? Absolutely nothing. Can't do nothing about that. If the market don't feel you, there's nothing you can do about that. Wait for a new opportunity. So that makes sense right there. So that's exactly how you guys should be using the higher time frame point of interest.
So when you are looking for entry on the high time frame fair value gap, why not look for entry at maybe at quad levels?
At what levels?
Hello? Yeah, at quad level, maybe at the 50%,
No,
75 or 25%.
Yeah, Peter, you can do that, bro. Like if you want to enter it, if you want to enter the 50% level of this fair value gap, that's perfect. That's even better. But with my personality, right? Sometimes I do deal with, like I say, I'm a human, guys. I'm not perfect. Sometimes I do deal with FOMO, right? Sometimes I still do deal, especially with higher time frame charts. I deal with a lot of FOMO. So to remove that FOMO aspect, what I tell myself is the moment price comes inside of that fair value gap, I'm entering. So I'm always entering at the top of a fair value gap. I don't necessarily wait for 50%. And once again, it's nothing wrong with waiting for the 50%. If you wait for the 50%, you get a better risk reward. If I would have waited for the 50%, like Peter just said, I would have had an easy 1 to 4 off this trade easily. So 50% come in here. My stop loss is the exact same. My stop goes where? Upon this fair value gap. I would look at right here. I would have easily had a nice 1 to 3. Look, 1 to 3, almost 1 to 4 off this trade. But instead, I entered all the way here at the very beginning of the fair value gap, and I got a 1 to 2. That's the only difference. That's the only difference. So it's not really okay, which way is better of doing it? No, it is which way fits the trader the most, right? I know that I have FOMO. I know that sometimes when price is near my entry, I tend to hesitate. So to remove that hesitation, I force myself to get inside of the market. So the moment price comes out of my PD rate, I press that button. But if you want to wait for the 50% of a fair value gap, that's even better. And what that shows is that you have more patience. And that's even better too. So that's a good observation on that, Peter. Yeah. Check right quick. Got some questions in here. 1 second. I'm going to go through right here and look at these questions, guys. So, all right. Let's see what we got. All right. Which CFD prop firms are you guys using next to FTMO? I use Quantel. Is Mo in here? I think Mo is in here. You guys see the guy Mo in Telegram chat? The guy that posted his certificate, I use the same prop firm as him, Quantel. That's a forex prop firm. They're pretty good. US 100. Yazin, I like that. US 30, October 3rd. That's a nice setup, bro. Premium market, stops rated, MS shift, displacement. It's a good setup. Ron, can we talk about consistency rule? Yeah. Difference between funding pips and ticks, which is good for one shot, one kill. Do funded pips, guys. Funded pips. I'm gonna say this right quick. We're gonna end. I'm gonna answer the next question. Then now I'm gonna go inside a prop firm, how to scale up. Right. I'm gonna teach you guys how to scale up and advance your capital. If you are in, you got to be honest. When I say this, guys, you got to be honest with yourself, right? Got to be honest with yourself. So look at your own trading and be honest. You can't lie. If you lie during this part, you're going to make the wrong decision. If you know that you're not patient, or if you know that you don't have good risk management, trade with a Forex prop firm. I'm going to say it again slowly. If you know that you don't have patience and you know that you do not have the best risk management, so that means that every single trade, you're not over leveraging, you're not moving your stop, you're never risking more than this percent. If you know that you can't abide by those rules, it's better if you trade with a Forex prop firm. Reasons, go to reasons. With a Forex prop firms, you have more room for error. So you can get inside of a Forex trade and a Forex prop firm, risk 2%, lose that 2%, and you still will be okay for the next day. So you still can trade the next day. But if you do that Mickey Mouse shit on futures, your account is gone. Off that one mistake, their account is through. If you have a 50K account with futures and you lose $2,000, your account is cooked. If you have a 50K account with Forex and you lose $2,000, you still can trade the next day. Futures, you can scale up quicker. So if you're one of those guys that want to increase capital to trade with bigger positions, futures is good for you because you can just go buy 10 50K accounts, merge them together, and you won't have to over leverage. Let's flip that to Forex. With Forex, it's a little bit more costly to buy 10 50K accounts with a prop firm because the 50K accounts with Forex, it costs about $300, $300, $200, depending on who you're going with. With futures, you can get a 50K account for $60. $60, $50, 50K account. And you buy 10 of them. And you trade them at the same time. So there really isn't which one is better. The question always going to be which one fits me the most. Because I know myself. I know me. And this is why I trade futures, but I also trade Forex prop firms too, because I know me. I know that I can go in and over leverage and blow an account in seconds. I know that I'm not going to sit here and shy away from that. I know that's my characteristic. I'm a very aggressive. I'm an aggressive trader, and there's nothing wrong with that. But you have to make sure that you're in the right environment to be aggressive. It don't make sense to be aggressive when you only got $2,000 to lose. But when you got 5% or 10%, then you can be a little more aggressive. But if you're not aggressive and you don't care about home runs and you don't care about, making a lot of money quick, that's fine. Trade futures. Trade futures and you'll do exceptionally well. So that question is once again, that question depends on the operator. Now let's get into consistency rule. So let's say that you guys want to trade futures. All futures, well, I'm going to just speak most of them. Most futures accounts have a consistency rule. If you don't know what a consistency rule is, you can fuck up your whole trading with futures. Because you can pass the profit target, but if you don't meet the consistency rule, you're not going to get that account.
My mama, bro.
So let me go over that right quick. So consistency rule. We're going to use 50%, for example. Most prop firm accounts have a 50% consistency rule. So what that means is you cannot make more than 50% of your total profit target in one day. So if you have a 50K account, the profit target is what, $3,000, right?
Yeah, 3,000, yeah.
So that means you can't make $3,000 in one day. Or you didn't make the
facts. You know what happened, Ron? Can we talk about it? Or you do
Let me go over it right quick because I'm running on a little bit of time. Let me go over right quick and I got you.
For sure.
Consistency rule. So let's say everyone got a 50K account in here. You trade with my funded futures. You got a 50% consistency rule. You got $3,000 profit target. So you got to make $3,000. You can't lose $2,000. in order to pass the consistency rule in an efficient way, if you want to be that guy to pass it in 2 trades, you can do that. How you're gonna do it is you gotta make $2,000. You didn't pass the consistency rule. Now you gotta continue to keep trading more. So our first day of trading, I made $1,500. So I'm right at the 50% mark. So the next day, let's say I come in, take a 1 shot, 1 kill, and I made 50% again. Now I have passed the consistency rule. 50% on day 1, 50% on day 2. Now, what we're going to do now is anymore. You have now went over the consistency rule. You are now going to be forced to trade. So whatever your balance is, you're going to be forced to trade more. So now your profit target may need to be $5,000. So now you probably got to make $5,000 to even pass the account. So keep in mind, consistency rule, 50%, 50K account is the most simplest way I can put it is, do not make more than $1,500 in a day. Never. Never let your profits float over $1,500. You can make 200, you can make 300, you can make $50 and still be, in the threshold for 50% rule. But you can never make more than $1,500 in a day on a 50K account. My funded futures consistency rule. So, KJ, for you, you're going to have to make more. You got to make more money. So
I gotta make 5 bands.
So you got to make 5 bands. So what you're going to do is you need to type in your full account balance, and you need to divide it by 50. So you just simply type that in on Google and hit divide by 50. Whatever that number is, you cannot make more than that number in one day. So if that number is 800, you can't make more than $800 in one day. So that means that if you're in a trade and you're floating $900, you're cooked. Now you got to make $6,000.
My mom, that sounds, man. But you know what's crazy though, Ron? They told me to use a calculator, right?
They told you to use what?
They told me to use a calculator and they sent it to me. And I used the calculator. It says I passed the consistency. But I don't think that's it though.
Nah, if you passed the consistency rule, bro, trust me, you would have got it. You would have got the credentials. You would have got the credentials instantly if you pass an account. I've had multiple accounts with them, and it's gonna tell you if you pass consistency rule on the dashboard. So I'm telling you right now, I already know you didn't pass it, the consistency rule, just off the profits that you showed me. You got to make more money. So the most simplest way to do that, type in on Google your total account balance, divide that by 50, whatever number you get from that, write that number out on your trading screen. You can never make more than that number in a day until you hit your profit target. So that means you got to continue to keep trading, for a couple more days until you meet that threshold. It's simple. Don't overthink it. Don't overthink that you went above consistency rule. You're good. Just once again, go find that number. I just told you how to do it. Get that number. Keep trading. Every time you trade, make sure you don't go over that number. In the next couple of days, you'll be at that proper target. Go ahead, Peter.
Regarding to that, I've shared something in the group chat where it can help someone to calculate the consistency rule. That was the one I was using when I was trading alpha capital.
PDF, you just put in there. It's in the Telegram chat. It's in the Telegram chat. Mindset.
Oh yeah, no. Yeah, he sent it to me yesterday. Yeah, he did. I peeped that, seen that.
I just need to change the 40% to 50%, and just good.
Yes, and yes, 2-phase. In my opinion, the 2 phases are better. But once again, when I say this, I'm speaking for myself. In my opinion, I think 2-phase accounts are better. And the only reason that it's better is because it gives you a little bit more room for error. So once again, Yazin, if you are aggressive, 2 phases is better. But if you're not aggressive and you're very conservative, you use small risk, then yes, futures will be a little bit more better for you. But I'm right in the dead middle, right? There's some weeks where I'm very conservative. Like next week, I'm very conservative next week. Next week, I'm not risking 15 grand again next week. Why the fuck would I do that? And I'm already telling you guys that the market is a little bit unshaky right now. I'm going to go in using right risk management. So next week, I may be trading more futures. So you may see me trading futures more. there's some weeks where I'm aggressive, where I go in and I risk the whole 5% on a prop firm account, or I risk the whole 4% on a prop firm account, and it won't phase me if I lose or not because I'm aggressive. That's when Forex prop firms come into play. So, in my opinion, in other words, keep things short and simple. Have both. If you know that sometimes you can go on tilt and blow the account, make sure you have a Forex account. So, in my opinion, get a QuantTel account. QuantTel is pretty good. I'm not an affiliate. QuantTel pretty good. They got their 100K accounts right now. So keep in mind, guys, they got 100K accounts for I think $340, and you also get a free one if you pass that one. So I'm saying again, 100K account, $340. If you pass both phases, you get a free account, so you'll have 200K. I like Alpha Trader, bro. I like Alpha Trader. But I think, if I'm not mistaken myself, the last time I was with them, they had some little silly rule where you couldn't make more than X amount in a day. I'm not a fan of that, so I stopped trading with them. Now, I don't know if they still have that rule. I have to go back and do my research on them. I haven't traded with them in months, but I know when I was trading with them, they had a silly rule where you couldn't make more than I think it was 4% in a day. That's total bullshit. At that point, you might well go trade futures if you're going to put a cap on that. But if I'm not mistaken, keep in mind, don't quote me. I don't think that they have that rule anymore. No, even when you pass, that's just from my own. I can be wrong, but from what the Discord guys were saying, even when you pass the account, you still can't make more than 4% in one day, or they'll close your account, or they'll take the profits away. Once again, go. Okay, cool. If Alpha Trader doesn't have that rule, then Alpha Trader is pretty good. How about it's going, Ron, that you lastly got promoted on, I forgot name, promoted. What are you talking about, bro? Promoted. Promoted where? Prop firm. I didn't get promoted on a prop firm, bro. You talking about Ash Street? When I did the interview with Ash Street Capital, talking about that prop firm, I had that. I mean, once again, guys, I talked about Ash Street. I'm not an affiliate with them anymore. I don't like. They didn't scam anyone. They actually gave back all the refund, so it wasn't like a rug pull or a scam. I'm just not a. They wasn't fully produced yet, and I'm not gonna tie my name to something that's not even really fully produced. They started up the prop firm, and then they shut it down to work on, making it more better. In my opinion, that doesn't make sense. Why even open a prop firm is not where you want to be at in the first place. So I just once again, I removed myself from that. I didn't make any money from affiliates. The only thing that I got from that prop firm was a monitor. And you guys seen that I posted the monitor on my Instagram. That's the only thing I got from that. I didn't make any money from people signing up. None of that. That's why I don't even do affiliate links anymore. I don't do promotions with prop firms. I don't do any of that anymore. That's not my style. I'm a trader. I can trade with or without people. I don't need affiliate. I don't need individuals to trade with. I can make my own money in silence if I wanted to be that type of guy. So, any more questions though, guys? Been on here for a good almost 2 hours here. Once again, I'm in Asia, so it's literally dead middle of the night. I know Yaz and Peter, we all in Asia too. So, time frame a little bit different for us.
How are you progressing with your FTMO?
FTMO has a hidden rule. Well, it's not hidden rule. For the USA side of FTMO, you can't make more than you can't risk more than 1% FTMO in a day. If you go through their rules, their FAQ, you will see this. You can't risk more than 1% a day. That's total, absolutely bullshit. It's bullshit. FTMO isn't the same as it was before they shut down. When FTMO was around before, you can do whatever. You can risk 4%, 3%, have fun, do your thing. Now they have very, very, very strict risk rules to the point where it doesn't really even make sense. So it'll take you if you only can risk more than 1%, if you can't risk more than 1% with FTMO, and you got to make 10%, that don't even make sense. That means you're gonna be on that same challenge for months and try to put them at 10%. Not my style, so I don't trade with them anymore. Can I get a demo account for futures? Yes. Go to paper trading, trading view, paper trading, and make sure that you're trading the futures contracts, and you'll be pretty much considered a futures demo. Or go to tradeovate.com. So tradeovate.com, open an account, do demo, deposit the money you want to put in the demo account, and then boom, now you're trading a demo account with futures. So, all right, guys. So, any more questions? I'm gonna be up out of here. I'm almost done, bro. I'm gonna be up out of here. This recording gonna be on YouTube. I'm gonna put it on YouTube, and we'll go from there. But if you guys got any questions for me, I've been in Telegram chat, and hit me up in there. I appreciate everyone for joining. I'll catch you guys next week, man. Let's have a good week.